Hello guys, good morning. Today I'm trying to I have a question from a subscriber asking about dividend. I have done I think one or two or three videos about dividend, and he asks if I hold like to invest for the long run and I get dividend. Okay, first, what is a dividend? A dividend is a profit sharing. It means when the company has earnings, they try to share with you. Okay, they take some earnings, some money, and they give it to you. Why? Because you hold the stock. But the tricky thing that most of the people they don't understand is this. I will give you an example to understand that. You see, Wall Street, when they set the game of stock market, of trading and investing, okay, it is a game. Now, if you don't understand what you are doing, what will happen? You lose money, okay? You think that you are making money, but you are losing money, but this because you don't have what we call the big picture. Okay, I have seen, I go online, one time I have free time, just 10 minutes or 15 minutes, so I go online and I find someone, all his channel, I find two or three people, some are young and some are old. What they do, they say, all their channel is about dividend, how to invest for the long run for dividend. Now I ask him one question. What is this question? You know that the dividend, the question is, you are not making money from dividend. But the people, they think they make money because they see their account. For example, you have broker account. You have, let's say, thousands of shares of a company and it gives you dividend. You see the dividend there. Okay? Which is good. But the problem, from where this dividend comes? Did it come from the sale of the company earnings, or it comes from the stock price? This is the problem. If the stock price is, let's say, going up or going down, it's okay. And if the company send me a check from the company itself, not from the stock, okay, this is okay. But the problem is, okay, see the problem. I will give you an example to clarify the big picture that I'm showing. Okay, let's say you have a stock that it is $100 a share. Okay, it's a big stock. I just give you an example with 100. At least when I give you percentage, it will be okay and you will understand very, very clearly. Excuse me. Now, you have a stock, you invest the whole year, and as you might know that each quarter they give you something, and then the whole thing is a percentage. You find, for example, a company, XYZ, it's $100. Now, they give you, for example, let's say 5%. 5% is too much. Okay, but I will give you just an example, just to understand what is this dividend and from where it comes. Okay, the stock right now is $100. Whenever they give you this $5, 5%, it means $5 for each share. What they do, in the X date, okay, the X date, it means the day where they pay. And if you don't hold the stock before, they will not pay you. Okay? So, since you are holding the stock for many quarters, they give you dividend, and the whole dividend is 5% a year. Okay? 5%. This is called the yield. The yield is 5%, and how much you get in all these quarters? You get $5. Okay, $5 for each share. Now, if the stock was 100, you will see that $5 is taken from the price, and now it is 95 in the X date. Because today, for example, it is $100. Tomorrow, you will see that it is $95. Okay, the price of the stock has gone down $5. This is just an example, okay? It's just an example to show you the thing. The price now is 95. It was yesterday, it was $100. So these $5, they take it from the price and they give it to you. And then you will see it in the in your broker account after a few days or a few weeks. You will see this money coming from that stock. According to how many shares you have, you will get the money. For example, you have 100 shares and you stay 1 year investing, and then you will see $500 in your account. Now this 500 is divided into 4. Okay, I'm just trying to simplify things, because each quarter they give you 1.75. It means you divide 5% by 4. Okay, and you get the money in each quarter. But for me, I'm just trying to sum it up. To sum it up in general, what has happened in the year. So from 100, it goes to 95. So you see that your money in your account, you lost $500. The first, when we have the X date, you will see that you lost $500 because the stock yesterday it was 100. Okay, it was 100. Today it's 95. Okay, do the math. 100 minus $5, which is 5%. You will have 95, and you see in the next day, your stock is 95, and you see $500 loss. Okay, it is a loss. And then after a few days, you will see this 500 coming, and it becomes 100. But the price right now is 95. So in general, what has happened? It is just they make you eat from your own cake. They have never given you anything. Okay? They give you nothing. The dividend is not something they give you. It's just taken from the price. Okay? And this depends on last year's price and today's price. Let's say the stock, just an example, last year was $120. So how much you lost? Not how much you make with dividend, how much you lost. Because if last year the stock was $120, today is 95 after 1 year. What has happened? Now, from 100, like yesterday to today, from 100 it goes to 95. This is 500. They will give it back because it is just dividend. Okay, they will give it, and you will see it later in your platform. But in real, how much you lost in this investing? The stock was 120 and now it's 95. You lost $25 for each share you buy. Okay? You lost. You are not making any money. And people, they still think that dividend is to make money. Okay? So dividend is just taken from the price. So it's not something new. Okay? It's just they take, it means is someone who invites you. This is what I call dividend. Dividend is like when you have a party. Someone invites you, you say, oh man, there is a party tonight. Okay, all our friends are coming. But you should bring your food, because we don't give nothing. Okay? You bring your food. So when you bring your food, they ask you to eat from your food, because there is no food in the party. The party is just to see friends. This is what I call dividend investing. Okay? And you ask me the question, why we see those people online and they have a channel and they have thousands of subscribers and they give them stocks that have the best dividend. Okay, go to this guy and ask him. Okay, ask him. Explain to us, what is this dividend? What is it in real? This guy who make the channel, either he knows or he doesn't know. He doesn't know to count. Because why I always say in trading, you should know calculation, which is primitive as math. Statistics, you should calculate what you are doing. Now, here is the thing. So I told you, you lost $25 for each share because the stock was $120, and now it is 95. Okay, so in real you don't lost $25 because you have $500. So you lost $20 for each share you bought. And believe me, $20 for each share you bought, if you bought a lot, you should see a big loss in your account. A big loss. That's why, if you are waiting 1 year and to see a big loss, and they give you some money, but you see how much you lost. Okay? Now, there is another thing. Here we say, we give an example of a stock that goes down. Now, a stock that goes up, you are making money. It's just because the stock goes up. Okay? It's just because the stock goes up, you make the money. It's not the dividend, they do nothing for you. Okay? For example, let's say the stock last year was $100 and today it is 95. Okay? Let's say the stock last year was $100 and today it is 115. For example, it goes to yesterday to 120, and then since they take the dividend off from 120, you get 115. So how much money you make? You will make $15 for a share from the stock appreciation, and you will have 5%, or yeah, you have 5%, which is $5, which is $500 if you buy 100 shares, $500 plus the $15 each share you get as a price appreciation. So what is the thing right now at the end of this video? What is it? I'm telling you something. If your stock is going up, your company is doing good when you invest in it each year, it's okay if this company has dividend. Okay? But if the stock has not appreciated from last year to this year, or it has gone down, you are losing money. How do you know? You just look at your account. You are happy to get $500 a year, and you have lost $2,000. $1,000, or I don't know how much you lost. Your account is in red. So there is only two things you should see in your account. I always tell in my videos, see the colors. That's why they give you colors. They give you only two colors. If your account is in red, it means you are losing money. This is just a very simple thing. If you bring someone, like he is in kindergarten, he's like 4 years or 5 years, and you tell him that the green color, it means you win, red color you lose, and you show him your account, this 4-year-old or 3-year-old, when he see your account, he will tell you if you are a winner or you are a loser. This is 4-year-old. This is not a big deal. This is just calculation, colors. Okay, that's why the brokers use this technique, which they use colors in their platform. At least if you don't see the numbers, you see the colors, because some people, they trade and they don't know numbers. Okay, they don't know if they are losing or they are at the end of the year. They will see, but at the end of the year is too late. Okay, because at the end of the year maybe you lose all your account and you can't trade anymore. Okay, so what is my opinion? My opinion is you should continue with a company that the stock is appreciate each year. It means the stock is going up. If last year the stock that you bought is $10, this year is 12, 13, you are making money. It's good. You are making money as an investor. Now when they give you dividend, you take this dividend out or leave them there inside, it's the same thing. Okay, when you take them out, it means they are out, so you do something with them. Okay, now another thing, why the people they use dividend? Now they use dividend. Most of these people are very old people. They are retired people. Some people, they have too much money. They have millions of dollars in their account because they have a good job, and the whole life they have taken a percentage of their money, of their salary or their business money, and they put it in this account and they buy companies. They study or they hire the financial advisor and they ask him, oh, okay, this company is going good and each year is the price appreciate. Last year it was $10. This year is 12. Next year is 15. The other is 20. So the stock is appreciating each year. Okay. So for an investor, he should look from 1st January to 31st December in the same year. In the same year, how much he make? Now, a lot of people who like these companies, who are for a long time, there are some investors who are too good. It means the company was $10, now it's 100, and he is still with it. It's for a long time ago, 10, 20, 30 years, and he's always buying stocks. It's not someone who buys last year and he sells this year. No, some people are true investors. Okay? Now, if he has millions of dollars, you say how he has millions of dollars? He has millions of dollars because he invested for 30 years or 40 years. And at that time the stock was cheap. And he put money at that time because the stock market is almost is going up by years. Okay? So some years are bad, but almost all the years are good. Now, these guys are having millions of dollars. Now, if you take, for example, 5% from $1 million, he gets 50,000 a year. Now, since he has his retirement plan or pension or something, or social security money, and then he add this 50,000. Okay, he go to have trips or whatever. Now this is for the people who have money. But if you don't have money, this 5% is nothing for you. Let's say you have $100,000, put put in stocks, and they give you 5% a year. Okay? Now, 5% is $5,000 a year. So, you are waiting 1 year to go to get $5,000. If your stocks stay the same. Now, if the stocks go up, you are making more money. Okay, each year, because the stock appreciate. Your account will be in green and it's good. But suppose that your stocks that you bought and it is a bad year and the stocks go down, what will happen to you? They will give you this 5%. Okay? But the problem, they give you this 5%, but the problem, you will see a loss from last year. Okay? You will see a loss because the stocks go down. Even they give you 5%, but you are losing money. So you see the big picture right now? Okay? Please, if you have questions about dividend, or you have heard some people talking, or you have gone to some websites, some people online who are talking to you, okay, invest, do this dividend thing, at least you have a general idea what's this dividend. The bottom line is, if the stock doesn't go up, you are just taking money from your account. That's it. You are not taking shares. This is the good thing. You are not taking shares. But some people, they do what? They buy more shares. For example, they get 5%, $5,000. Each year, they go to these stocks and they buy more. Yeah, they want to make more. But if the companies are going good and the stock appreciates, it's a very good thing. But if the stock doesn't go up good, it's the same, and you take the dividend, you will see nearly nothing. It's break even. Or if you take the money from your account, you see a loss. Okay? Because the money is there in your account, and either you invest it again, or you take it out, and you have to pay the tax when you take it out from your account. Okay, this 5%, but you pay less tax than when you are trading. If you invest more than 1 year and you take your money, the tax will be less than when you are trading in like swing trading or day trading. They will calculate this as an income. Okay, and they tax you more. Okay, this is what I see. Wall Street and the government and the big and the rich are always working together. Don't be fooled with other people. Okay, everyone wants your money. When you put your money in the market, you don't know how to trade, they will take your money. This is a game. You should understand the game in order to beat Wall Street in their home. Understand the game. Now, if you don't understand what you are doing, they will rip you off. Like this dividend. Okay? You eat from your own cake and they told you, oh, it's dividend. It's a profit from the company. No, it's not profit from the company. They take it from the price. So where is this profit? If you send me a check without touching the price, it's good. For example, the price yesterday it was $100. Today is $100 or $100.50 or something. It's good. And you give me 5% of dividend, like if it is $100,000, you give me $5,000 as a bonus. It's good. I am okay with that. But if you take it from the price as a dividend and you tell me, oh, this is your profit, no, man, you rip me off. You take my money from the price. So yesterday I see the price is $100. Today I see $95 a share, and you told me you are making money? No, I'm not making money. Okay? So this is the truth about dividend. Now, if you have any question related to that, or you don't understand something, I will try to put more input and more explanation about this. But calculate always what you are doing. And when you put your money as an investor, investors, if it is good years, they can make money, okay? But in a bad year, like what would happen in 2008 or 1987 or the other years when it is a bad year for investors, you know, they will take almost all your money, okay? In some stocks or mutual funds or wherever, they will take a lot of your money. And since you are an investor, you stay and you don't do nothing. You say, oh, the market will go up. Okay, but sometimes, some stocks, the market will never go up. Believe me, those stocks are dead. You find them 100, next year they are 50, and the other years 30, 25, 10, 1, and then they reach $1. And you always think that this will go up. This is a dream. Okay, some stocks will never go up. Some companies, they do bankruptcy. How can you tell me the market will always go up? No, the market is, they think about the market, the whole market. They don't think about stocks. That's why people, they invest in mutual funds, because they are slow, either going up or going down. They are slow. Okay, that's why they invest in them, and that's it. So thank you very much for watching. If you have any questions, just ask. Thank you.